How's everyone doing today? Today is April 18th, 2021. Happy Sunday to you. Hope everyone's well, healthy, blessed, whatever you want. I'm glad and hoping that it's happening to you guys right now. If you're new here, how are you? My name is Evan. This is Fifth Third Trading. I'm the CEO, owner, sole proprietor, and the guy who accidentally took a name that was already taken. Don't sue me. What's up? And if you're new here, I'm going to show you all the technical analysis you need to know for these plays of the week. You should do your own due diligence. Obviously, this is only a watch list show. What I'm going to do is take all the YouTubers who go and make lists and all the YouTubers who go and make educational material and put them together. And so you're going to see some really great stuff today. We have what looks like to be eight really good plays for today, all about different sectors I've been focusing and some great things and getting some diversity out there. For the new people who don't know, I'm going to show you supports, resistances, trend lines, patterns, volume profile, where I was going to look at RSI, stochastic, vortex, a bunch of great stuff, all these trend lines, patterns, supports, all these things come together to make these fantastic plays. I trade off of the 180-day time chart, so my goals usually is a whole 10 to 15 days. That's about. So if you like day trading, that's fine. I don't do it, but if you like swing trading, you want to come diversify in some longer holds, this is for you. Intermediate traders, if all you know is EV stocks because you've been in for about 8 months to a year to 2 years, I bet last week was kind of brutal. Sorry, I hope it's better this week, but you gotta diversify, and I'm gonna show you some great stuff to do with that exact thing. With that being said, if you enjoy this kind of content, if you really like it, if you're like a full-grown man who calls himself John Stonkton and Chef Boyer Swing and Bruce Spring Swing or Swing Stream, I don't know, I can't. It's gonna be a hard one to get down. If you enjoy that kind of thing with me mumbling and yelling about stocks for every day of the week, subscribe, share, like, it does help. If you also really enjoy this content, we have a Discord channel full of really veteran traders and myself that really like to help people and show some stuff. If you want to do a 7-day trial, just add me. It's my name at the bottom, just description box, you'll see it down there. If that sounds great, awesome. If not, it's no big deal, but I want to feed my kitties as best as possible. You want to sub and do that, you can help feed this boy. That'd be very helpful to both of us. I don't want to take too much time on the intro, but again, this is the most lit channel for YouTube, the most anti-suit and tie and hype channel there is. If you want some anti-hype picks, I got the best ones for you. With that being said, let's get into it. So as I was saying above, we have 8 great tickers to go over today. 2 are ETFs, and that's going to be a whole different animal for you to tackle, but that's going to be on you to do the due diligence on. These are great technical setups, but these few in here, I'll talk about those for sure, need to be ETFs that you cover and you do intelligently by yourself. We can see the future's not really moving today. Of course, it's the weekend, but not looking great, but it's not terrible. And of course, I think there's some industries that are better than others. I think that this week, materials, it makes some sense. I think consumer services does not make sense. I think energy makes sense. Financials make sense. I think industrials make sense. I think that consumer staples make some sense. I think low cap technology does not make sense, but big cap does. I think real estate getting up there, but you ride with me. You're welcome. I think that healthcare makes a lot of sense. Utilities makes a lot of sense, and so does discretionary. Now, they're not evenly distributed, but I like all these moving forward in this week. So let's look at our first stock with AEYE. And you're probably thinking, but where are the lines? I'm gonna show you. That's why we're doing this together, my sweet baby angels. So our first support area is definitely right about here. I'm just ballparking. Right about there looks good. First resistance could be right about here, but when it comes to risk versus reward, I want to aim probably closer to about here. Looking good to me. I make all my resistances orange. So there we go. Our trend line's fairly obvious from where it was down here. I'm going to do that line. We do cut through a little bit, and that's okay. And I think you can probably come over here and draw one like this and see we're probably a lot closer than I think we are. So, it comes down to your preference and what you think your trend line should be. I think this is a fine one, just like this. So we're getting close. I think we have a few days. We have a few days to watch this. Let's not get ahead of ourselves. We want to really do convergence. We need this to come down maybe another 5 or 6%, even 7. What I think is going to happen is one of these. It'll get down to right about here, and it will take off from there if it chooses to take off. So we have that looking good. We have our trend line. We have a bearish one. Well, we do. I think this is a fair assessment right here. This looks like a really good bearish trend line. And I say good as in not profitable for us, but at least we have some idea of what to deal with, what we're looking at, right? Where our risk and reward are going to be. Turn on your volume profile, and you can look that we have our 70% channel. We're inside of it. That's not really here nor there. And we can see there's not really a strong resistance attached to this line, and there's not really a strong support attached to this one all the way down here. So this is not really that helpful for these two lines in particular. The POC is, we can see a lot of consolidation happens here, so if we do dip below it, we should be seeing the POC eventually, which means we probably got another month or a few weeks of waiting, honestly, if this all breaks down, which is fine. We'll just wait for it to come to us. There's your charting. One thing to note, this is a really big, nice looking capital D node here. If you're new here, you may not know this, but for those who've been around for a while, I like big, thick nodes. So this is definitely a nice, big old thickums right there I want to play off of. We can run this whole node up if that's the case, 28%, not bad at all. So that's the charting right there. Last but not least, we put a little cherry on top of the ticker itself on the chart. So when I screenshot it, folks know what the hell I'm talking about. So that's what we're dealing with AEYE. We have definitely some lower highs, which is concerning. It definitely should be. But macro level, we have higher lows across the board. Now, as of recently, it's been very minimal lower lows. Like, this is a very close call here. So we're going off the support and the overall trend line. This is called a bump and run, where it does a brand new trend line and goes up, and then it breaks it. It usually comes down to its old trend line. That's kind of what we're playing off of. So AEYE, I wouldn't buy it today. It's Sunday, so you can't. But I wouldn't buy it Monday or Tuesday unless it dips farther. And of course, this is in fact a falling knife. This is exactly what Ryan and Mara are doing, and some other popular ones are just dying off. Don't try and time the market, you're being stupid. But if this does get to a good value, it should be a great play. Let's check the indicators. What's super cool about this channel in particular, besides myself, is that we have, I do not look at the indicators whatsoever. I have no idea what they look like. I don't know if the EMA lines are showing it something, if the RSI, stock, or vortex, it's all blind. So again, when I go through these with you, you're gonna see exactly what I see in live time, which is pretty cool. So we have a clear resistance with the support with the SMA and EMA lines here. Again, I use EMA lines, but these are going to be a resistance. Until you get above the 200 and the 50, you have to make sure your short-term price target, short-term, not long-term, but short-term, has to be based off these lines, at least to some extent. You can see you can get above them, but you have a hard problem getting above them and staying above them. So if I'm going to be planning my price target, the resistances here, and this downtrend line and these EMAs are going to probably line up pretty well to about, $27. You get to $27, I'm going to try and, get this profit off real quick, because that's going to be a problem moving forward. RSI is gorgeous. Gorgeous. Oh, it's below 30. You want to have that. That's fantastic. Stock is low. Again, fantastic. Falling knife. There's not curl north. I've not seen stock has to come below -40 and curl back and break above it. Until then, we have no power, so we're going to wait. We can also see that vortex exactly where you want it. This is a beautiful indicator. If you don't know more about it, it's made in 2011. It's newer, but it's like MACD or RSI on steroids. We know how to use it properly. You can buy it in a crossover for a lot of profits. Go pause the screen and go through. Every time it crosses over, what happens? You would have made money almost every single time. It's extremely accurate. But you could also, for swing trading, buy at the bottom. Every time it dips out, you can see it's very similar to RSI, the green line. But then again, you can also judge where the bears are. And bears are overbought, bulls oversold. I mean, AEYE may make me act up this week. I don't know if it does show some life. It could be a good pick. For sure. So AEYE looking really good. I just need to have some form of life. But moving into this week and into tomorrow, a fantastic pick. Next is DVN. DVN was a broadening wedge. See this? It was a broadening wedge, and I say often on this channel, if you're connecting trend lines that hit more than 3 times, which is my rule, you can see that it hits 3 times, and now it's broken, and now we can see a brand new one forming, again, 3 times, 1, 2, 3, just like this, making a nice looking triangle. And so you see this pattern died, and on live, you can see now that this pattern has died, and now you have a brand new one forming, 1, 2, 3, perfectly. So again, folks are like, oh, technical analysis doesn't work. Sure, it works fine. We pair with other things. I wouldn't do just this. That's dumb. But this is what the show is about. So, beautiful looking triangle. It has our risk versus reward parameters set up for us. I think risk-wise, you got risk 3.5, maybe 4% if it does drop farther. But you can see on a good move, breaks above 5, 6, 7. It breaks and does what I want to break out. Can easily see 8, maybe even 14%. So, good risk versus reward. I called DVN 2 times last week, I think. I have a lot of faith in this one. And again, if I have a lot of faith in it, it's probably going to die because that's karma. That's how my life goes. But DVN, gorgeous uptrend. Gorgeous support area. Again, it's all there, all the convergence. Let's check the indicators. We can see a clear story developing with DVN, and I've been watching this one, so I knew it was going to happen. But you can see it's riding the 200, which Always does. Boop, 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 boop. Gorgeous. And it can't get above the 50. Your signal to go long can be based off of two things. Value, or SMA crossover, an EMA crossover, an MA crossover, whatever you want to use. Whatever time frame, doesn't matter. I use a 180 day with the 200 and the 50. We're buying the 200, that's a great value. So you have a value buying and now off a value makes complete sense. If you want to wait for us to get back above the 50 EMA line, that also makes complete sense, because 9 out of 10 times your massive run-ups come when you're above the 50 and the 200, like that. See how every single time it's above the 50 and 200, it usually prints pretty well. So if you want to wait for a crossover, that's totally fine, but you're going to also have to realize you wait for a crossover, that's more risk unless you can go ahead and move your stop loss area up. So if you wanted to say, okay, I'll wait for a 50 EMA crossover, which is very valid, it's a great strategy, you can't put your stop loss down here anymore. Nope, you got to move it up to probably about, 2020, 22.18, 22.15, and then let the bad boy run. So EMA wise, gorgeous. RSI, it could be lower, okay, but it's not terrible at all. It reverses plenty around this area, that's cool. Stochastics drop in like a rock, so I wouldn't buy in too quickly. It starts to curl tomorrow and go up with plenty of room to run up, that's not bad. And we just had a crossover for the green. So you would have seen you would have made money when it crossed over. It's a bit lagging, so you would have bought in and, got a little bit of a move. So that's not perfect. You want to be probably down here. You want to probably be, at 0.69, what's up? But this is fine. If it does cross over red, we may have 3 or 4 days of consolidation. But DVN into next week and into tomorrow should be a fantastic pickup, at least to watch. Next is HEAR. What a gorgeous triangle forming. Chef Boyer swing in the house. What's up? We can see a clear higher lows and a clear lower highs. That equals a triangle, right? It has 3 sides to it. 1, 2, 3. And this is going to be a great play because of what? Risk versus reward. I think we can get a better price. I think at $25 is a perfect buy-in for this. If it dips below like 24.14, get rid of it because this is not a strong support area. It's okay. I mean, you could play off at 22.21 if you wanted to. But I think if you can get down to like 20, that makes sense. So if it dies here, that's a break of the triangle. I wouldn't go for it. But if you do get down here, look at, you can make easily 8, 9%. If it breaks out, you're going to be riding this bad boy for a few weeks, getting some money off of it. So fantastic, easy read here. I wish we could have bought in HER down here and you could have played it. But again, this is still a great consolidation price for finding such a great ticker. Let's check the indicators. So we can see the EMA lines are consolidating right down the middle of the triangle. That kind of makes sense. It's consolidating for a big move. These will be resistances. So if you do get to about, $27 and starts to die, take your profit if you get nervous. RSI, dummy low, great. Stochastic low. We have our bulls oversold, bears overbought, and that's what's happening, right? You're just doing this motion back and forth constantly. HEAR, I have no guarantees of it being successful. I really don't. But what I have a guarantee of is that if you do your due diligence and you can play this correctly, it's a very good, low risk, high reward kind of play. In this kind of market, with the lip melting up and taking its time, that's what we want. Next is JDST. This is the one. This is one of them, besides the last one. This is an ETF. This is not going to behave the same way as a traditional ticker off technical analysis and a dash of fundamental. It's not going to do it. You have to do extra research. Now, I'm very bullish on JDST simply for the risk versus reward. I like it. It's very consistent, but this is a ticker that's been doing this for a very long time, and this will break eventually. So again, stop loss, your own research. I'm only some guy with big dumb hoops in his ears and his nose with pink hair. Again, do your own research. This is a great show. It's a great time, but this is the one you got to really follow up on. JDST, we go to the 10-year chart. We can see that's clearly had better days. And again, this is obnoxious. Okay, this is not real. They reset these things in these ETFs. They constantly resetting these, right? So we're back down where it kind of makes sense. But you can see over time, it's always going down. But they're always constantly, resetting these things. So it's not the greatest thing, but the reverse is a better looking chart than this. So make sure you're constant on top of it, that this is going to be constant resetting and stuff. Now, this is a great area to buy into. Perfect. I think that you can get in lower, but you got to see, broke it, didn't break it, broke it, didn't break it, broke it. Oh God, didn't break it, broke it. So again, you have more breaks than not, but if you want to really buy in here, what's the risk? All right, 6%. If it really dies on you, all right, that's a lot more than usual. But that's when it kind of comes down to you betting on the technicals and the fundamentals to reverse sooner than later. Or if you want to miss the full move, that's fine too, and let it have some more form of confirmation. But, you know, the first resistance 8% away. And it does have a problem breaking that sometimes, but so far it looks like most moves get to about, you know, 17% up. That's a great risk reward. Even 6 to 17 makes a lot of sense. But easy horizontal play. Do your research on gold this week, but looks really good. Let's check the indicators. Once again, and this is an ETF, it acts differently, but until we get above both EMA lines, there will be some resistances, and those may line up very well. Of course, see the 50s being a very hard resistance and support. We may hit the 50 and die. If that's the case, scale out and then wait to buy back in, or take our profit and then buy back in. We can see RSI's under 30. Bueno. We can see a clear divergence as well. From here down, and this is showing lead. So that's a clear bullish divergence. I don't draw those very often anymore because I'm just busy, but like I look for these very often, and we can see no bearish forming. That's a great sign, and it's also low and curling. Bulls where you want them, bears where you want them. JDST I think is a knockout of the park if the due diligence and research makes sense. If that's going to check out, we have a lot of great plays with this going in this week. I am a bit nervous given that it's not going to act the same, and some folks are going to rush in balls deep and get burned and then be mad at me for not doing their own research. So make sure you do your own research on this. I have a lot of faith in it, but again, this is on you to do your own research for it. Next is LQDT. It's a similar set to here, but it's a little bit more horizontal and expanded. We can see that there's clear horizontal plays going on. And I think that you can consider the POC to be the strongest support area. If it does break down and hit the POC, if you didn't buy in yet, that'll be your buy-in spot. If you do like this kind of triangle play, go for it. But if this does break the POC, a great place to buy in for this one. And it does dip down. I think it's going to dip down a little bit farther. Okay, we have another day or so. Comes down, hits 1735, 1720s, and comes back up easy 13% if it does do this. So I think that's going to be a great play. And again, I don't want to get too attached to this. We can see also clear trend lines before. That was playing off of and broke. So we're trying to find new ones. A bump and run possibly into this new trend line. But this does continue. We can see some great movement off this. LQDT. Triangle, we need a day or so. If it does survive though, easy 12%, 3% risk. This is beautiful. Let's check the indicators. And we can see clearly, compared to here where they were kind of in the middle, we can see that we have a very clear support at the 200 just like DVN does. So it's holding the support great. They can't break the 50. You can wait for a crossover, but you're going to give up a lot of reward for that, and that's fine. You want that kind of validity because it's going to break the 50, take a few days, and if it doesn't make it, you're going to break even. Worst case, that's totally fine. But this 200 is holding great. If we come down here, there's going to be a lot of convergence going on. Will be great. RSI is fair. Yeah, but it's consolidating, so that kind of makes some sense. But it's on the lower side. Playing to go either way. Stochastic's low. Yeah, that's good. It's definitely lower than high. So if it does break above, you know, -40 and keep going, beautiful. Bulls low, bears high. So again, LQDT for this week makes a whole lot of sense to me, but I want a cheaper price with the melting up of the market, and we're kind of having, you know, a lot of dundrels back and forth, back and forth. I want some form of confirmation or a better deal, but LQDT makes a lot of sense. Next is NXE, Next Gen Energy. Again, I'm pretty hype on energy, not EVs. And again, some folks are gonna be like, "You're a hater." That's fine. You know, haters make, you know, if there weren't haters, would I want to fly and soar so high? No, I need haters. Thank you. My haters appreciate it. So NXE. Yeah, beautiful trend line. Do I think we can get lower? I do. I do know NXE pretty well. I played it a few times. The 200 EMA line is probably what it's on. I don't know for sure, but I'm going to guess so. That's what's at. The 200 is probably somewhere around here, but this is a great trend line. You have a strong resistance. Okay, right about here. Is this an ascending triangle forming? I would think so, because we can come over here and move this up and see that this is definitely once, twice, 3 times. It's making this kind of little triangle ascending going on. My favorite plays, it's very similar to PFSI, which is still a very alive play that I called. It's doing literally exactly what I was starting. So if you want another one, there you go. But NXC right here, I think it may come down a tiny bit farther. It's going to be quick. If it gets in, it's going to be a very quick play. But if it does get down to like 349, you know, risk 4 or 5% to really make sure it's not going to live, like Mogo kind of looks like right now. But a good full move, which I'm not saying it will do, but full move, 30%, gonna make me act up. That's a snack. That's Chef Boyer swing stuff right there. John Stonkton in the house. Let's check the indicators. we can see, because Evan knows NXE because of this back here. There's a bunch of plays that I used to play before I even did channels that this was golden because it's $1. You can get in here and make almost 10% in like a day. I remember NXE. I miss it so, and that's okay. This is a gorgeous 200 line play. Again, it could bounce here, it breaks it, and come back. So I think we're gonna break it and come right back. RSI low, stock's a little overbought. All right, so I think we could wait. Again, that's what I'm saying. It may come down a bit farther. I would give it a day or two, maybe 3. If it does come down, and again we're consolidating, it's kind of going in the middle here. I think we're going to see bulls die down again, bears take up, and then we're going to have a full move. So NXE, I may miss the move. That's fine. I'm willing to miss moves for better risk management. I think that some people are so hasty and they get so excited that they actually miss the point of risk management of like waiting for it to come to you. And I will miss many more moves than I will take, but I also lose way less than everyone else. So again, it is what it is. But NXE looking really good. Next is PSNL. If you've been in this channel for a while, and I know some of you guys have been, you've been like, I remember PSNL, I remember this bad boy. It died. So it died pretty hard around February, and then I'm trying to get back into it. But this play before, I made over 100% on it. It was great. So PSNL, we can see a clear old trend line Daddy used to play off of, and then it just broke it and never came back again. That was that huge murder that we all remember having that gigantic sell-off weeks ago, and PSNL was a victim of it. But it's a beautiful, beautiful area to buy into. We can see a clear area of support right in this area. Again, you can see even right here, it was a resistance months ago. It was also a support months ago. So do I think it may possibly, with this downtrend it's making, possibly get down to like 1863? Maybe. I think that's possible to get down here, but this is also a very strong support area. If it does break this trend line, keeps going up, all bets are off. PSNL is known to print. I mean, it'll make you some money for sure. So PSNL, I'm a bit more emotional with, so I'm trying to be extremely conservative because I'm knowledgeable about myself and know that I'm more likely to try and get emotional with these kind of takers that I like this and surf. So I'm gonna give it a day or two. If I do get down to like 20 bucks, I may have to take it myself, but it looks really good. Let's check the indicators. So you can see clearly it can't break the 50 EMA line on this time chart. And this is the beauty of what I do, is that I use the same time chart over and over and over again. And I use the 50 and the 200, which are definitely the best. Now some folks use the Fibonacci numbers, which is fine. Some folks use SMA, that's fine. Whatever it is, but I still think that the 50 EMA line, 200 EMA line on the 180-day chart is undefeated. It's definitely the best in my opinion. We can see before I used to buy it. Oh, it's in a 200. Buy. And that was great. So it will have a hard time getting above this 200 once again. But once it breaks the 50 in this downtrend, it's a whole new ball game. So make sure your price target's based off of this. 8% is probably the top you want to really get bold with. Otherwise, I'd sell out and scale out when you get close to that. RSI, it's low. Could be a little bit lower. Stochastic, it's low. Could be a little bit lower. And again, right here, it was consolidating. But bulls could get lower. Bears could get higher. So PSNL, I need a day, maybe 2. But if this does do what I want it to do and really shows some life and really starts pumping out some gas and doing what I want it to do, it'll be a really fantastic pickup nonetheless. And last is UUUU. This is another one you need to go deep into fuel research, and that sounds super boring. Okay, if you ever heard me say anything more boring, you'd smack me in the face, but do some research on fuel tickers and the ETFs and the whole business of fuel. This is going to be a whole new ball game for a lot of you. UUUU is going to be fine, in my opinion, but again, do not trust me. All right, you should trust my intentions. You should trust all these kinds of things, but never, ever, ever go off with someone else's advice, ever. And this is not advice. This is a watch list show, of course. But anyone on YouTube is like, go buy this. No. You got to do your own research. And this, again, is one where I think it's critical you do your own research, for sure. UUUU has a beautiful trend line. Now, it's only hit once, twice, 3 times, and I'm anticipating and expecting a play. It's not really a pure one. Now, I could find plenty. Like, that was one, and it broke. So, again, I'm not overly confident in that trend line that just broke. And, again, I can come over here and, finagle it a little bit higher. I'm not going to, because UUUU is extremely volatile. So, I want to see it get lower. This is a support area, right where it's at. This is a support area. If it reverses here and you buy into it, hell yeah, knock yourself out, boy. You killed it. Great job. I will not be paying more than $5 for UUUU. I want to make sure I can get down lower. If I'm doing that, I'm also admitting and showing lower lows, which it already has. It already has a lower low. So again, if it does come down lower, that's going to continue. And it also has lower highs. So I got to make sure that whatever my price target is, if it gets down here, is based off of these lower highs and with the intention I'm not going to hold it that long, because if it does come down here and bounces, all right, this is going to be our first resistance that's major, and then we're going to hit this trend line eventually. So make sure if you do play UUUU, you have your risk management cap on, you have your research hat on, because it's great, it's fantastic, but I want to make sure that research is done extremely detailed with this one. Let's check the indicators. So it breaks the 200, but it usually comes back. Now again over here, it would break it and then kind of muddle around on it. Now it's clearly trying to hold above it. If you want to wait for it to get back above the 200 and the 50, more props to you for being more risk averted, because then you can use this as your stop loss. You can make probably 10-11% pretty easily, but then you got to be patient with it. I think a value play makes more sense here. RSI low, stock low, again, Vortex looks great. So UUUU makes a lot of sense. But again, I cannot be more clear to you that with a ticker like this, in an industry like this with uranium and energy fuels, you got to make sure you're on top of your shit for real with this kind of play. And there you have it. We have 8 beautiful tickers for tomorrow and into this week. What you should be expecting, again, in my opinion, is that small tech growth stocks still have a hard time. You can pick your spots. I don't think there's going to be any doubt of that. But if you're going to be going to tech and that's it, you're admitting, again, maybe subconsciously and unintentionally, you're willing to fish in a smaller pond, while someone like me, who advocates for financials, utility stocks, healthcare, consumer defensive, whatever these things are, we're going to be fishing in the ocean. You choose. Do you want to go ahead and fish for only technology stocks? Again, they will outperform utilities any day of the week. But with sector rotation, are you willing to go ahead and fish in a pond instead of an ocean? That's on you. That's my opinion. I think if you're going to go with not trading some things because you're uninformed, that's ignorant. That's literally what ignorant means. I think they should definitely be aware of what you don't know and then try and get better at it. That's it for this show. One last thing I always say in my Saturday reviews and for folks one-on-one, if this is confusing to you, that's fantastic. That means that you have things to learn. And if you are super confused, stick around, my boy or my lady, because if you don't, you're going to then know that there's information that was presented to you, you never acted on, and then you go find someone else who's really dumbing this down to a point where it's not even applicable to what you want to do. If this is all very confusing, I suggest you go trade -ES, -NQ, -RTY, and -YM. Once you master the indexes, you go trade the sectors XLB, CE, FIK, PREU, VY. Trade all of those, understand those, and then you can go more micro. So this all sounds very confusing to you. Comment down below and let me know why. Hit me up on Discord. I'm always on it. So have a good rest of your Sunday fun day. We'll see you guys this week for more videos, more content. I appreciate you. See you guys next time. Thanks.